the meeting to order. It's okay. I want to bring the meeting to order. Item number 2, Jamie Blaine, we want to welcome you to the investment committee. We really appreciate your willingness, and we appreciate your integrity that you've shown in other committees and some of the wonderful things you've done to the town. And I hope it's an interesting path for you. And when I saw you recently, you had no idea that the town had this kind of assets. And it's an unusual thing. There are not many towns in Maine that have these type of assets. So there's a great responsibility that comes with it. So we want to maintain it and do well. Let's see, item number 3. I need to accept the resignation of Jason Irwin from the investment committee. He was the CFO at Friends of Acadia, and he's decided to go off on his own and travel. He's a young guy, and he's really smart, and I think he was really helpful for the path forward that this committee had. It was very, very helpful. So anyhow, we want to make sure that in our minutes that goes to the Board of Selectmen also, so they know to thank him for his service. Next, we want to item number 4, Michael Bailey, who is also a member of this committee, is a PhD candidate to complete his dissertation for the fall of 2025. And similar to the Warren Committee, I don't ask people to leave the committee. I think we'd like to, with everyone here, because I'd like to let him be excused at every meeting. So we will mark him excused, and that should be fine. Does anyone have a problem with that? Therefore, moving on, Michael Bailey will be excused until he defends his dissertation. Matt Weaver from the First National Wealth Management. Welcome.
Thank you, Phil. And thank you. I want to extend a thank you to May for offering the Zoom option. I have 2 children graduating this year, and we're having a little get together this evening, and not having to take that 3-hour drive from Northeast Harbor certainly helps my cause. So I appreciate that, May.
We're so glad to have you either way. Thank you.
Thanks. So I thought maybe for Jamie's benefit, I'd just give a quick overview of how long we've managed and how we manage the portfolio. So I think we won the RFP in 2015. So we've been managing for almost 10 years. I love the town policy. I think I've mentioned that to the committee at prior meetings, but it's a policy that I actually go to other municipalities, and as an example of one that that has these ranges in place with the major asset classes, where we have a little bit of wiggle room, if you will, in terms of where we want the allocation, and it's a 40-60 mix of both fixed income and equities. And so I think we've done pretty well. We've managed with a sort of passive approach on the equity side, and we're buying a high quality fixed income on the bond side of things. So I thought I'd start by going over performance, which is the report with the pie chart on the upper left-hand side, and the middle column, which is fiscal year to date relative performance. If you look at the top line, which is total fund, we see a return year to date through May of a little over 3.5% against a blended benchmark of 2.98. So we're a little ahead there. A lot of that alpha or outperformance is coming from the fixed income side, and I'll get to that here in a minute. But as you can see, most of the equity returns are right there with the benchmark. We've kept our fixed income exposure pretty short for quite a period of time when we had very low rates in the COVID era. we wanted to make sure that when the Fed started to raise rates, that we could take advantage of those rates. So we had a very short ladder, if you will, of 2 or 3 years, and that's benefited the portfolio because over the last 2 years or so, we've been able to buy 1 year, 2 year, 3 year CDs north of 5%, and we have the fixed income yield in aggregate close to that 5% number. So we're not waiting for assets to mature for another couple of years. We have a couple more in there, but for the most part, that strategy's worked out very well. The taxable fixed income bucket here, which is the second from bottom, shows the assets of almost $5 million. And if you head over to that fiscal year to date column, you'll see we're just under 1%, where fixed income is actually negative this year. And more importantly, I think performance is more significant the longer you go out. And if you look at all of these 3-year, 5-year, 7-year, and inception numbers, we're in front of that funded benchmark. So, and this is net of fee. So that's important to mention. But before I go on to the portfolio, just take any questions you may have regarding performance.
Matt, what's the blended benchmark? Is that where?
So it's a mix of the benchmarks you see below. Was that Jamie that asked the question?
Yes, it is. Sorry.
Yeah. So we have the cash here, the three-month T-bill with the major equity benchmarks, Russell 2000. We've got the intermediate government credit for the fixed income.
Thanks.
Yep. Yeah. So if there are no more questions regarding performance, I'd like to move on to the portfolio summary, and specifically page 2, which will give you the allocation numbers where we are.
Are we still on the same one right here?
No. We're on this statement, the portfolio statement.
We have to go back to the statement. This is separate.
This is the statement.
Yeah. So, going back to that low rate period, if we were here, if this is 2021, that cash number would have been considerably under the 8% we have now, because, as you all know, money market rates were hovering around 0.1, 0.25. So it really wasn't making any, wasn't really working very hard for the town. But now we have a money market rate of over 5%, and having that cash there gives me the opportunity to wait for good new issues coming out that I think are what we want in the portfolio in terms of mostly CDs is what I look for, and I make sure that I keep our exposure to any one financial institution under the $250,000 FDIC limit, just to be safe there. So you can see we are at 44% on the equity side, a little over 47% on fixed income. So we're below, that we have that range. We're a little below the midway point of that range. In our opinion is that equity markets are fairly valued. I guess some could argue they're overvalued, and they may be in some parts of the market. Growth has had a tremendous run over more than 5 years, really, and with the exception of 22, where growth was hit pretty hard because of the Fed rate hikes. So That's where we are in terms of the allocation. If we were to have a pullback, it would be an opportunity to raise that number on the equity side. Moving on to page 3 of that report, May.
Got it.
You'll see the money market bucket there at the top with the 5.17 current yield. That resets monthly. So that's important to know, because when we're looking, we want to lock in rates when we can and buy 1, 2 year, 3 year CDs, as I mentioned. Sometimes I'll buy a corporate bond as well. But we understand that these rates may not be here forever. The Fed is telling us that we may see a couple of rate cuts here at the end of the year, but that's certainly dependent on data coming in. We've had a mixed bag of inflationary data, so we'll have to wait and see what the Fed has in store for us. But if they do cut rates, it might only be a couple of cuts here, and I would expect when we meet again in January that yield will maybe below 5%, but not by much.
Yeah, so let's say we get a 50 basis point, that's really not going to affect what we're doing with our cash, and we got to take advantage of, while the interest rates are well above 4, it makes a really, to have that piece of a position is a really smart thing as far as I see.
Yeah, it's a risk-free return. I'll take it. I've waited years for that. To have that. I can remember back in 05, 06, you could go out and buy a 5-year corporate bond at 6% without thinking about it. And then, with what happened in 08, at least for my career, it really changed how I thought about fixed income. And again, I will buy corporate debt from time to time, but especially with municipalities, and the fact that we're a fiduciary, we need to do what's right. You won't see any individual securities in these portfolios. I don't want headline risk in the portfolio for a municipality. I don't want to have to come to you and explain why a stock was cut in half. I always think back to BP and the rig explosion in the Gulf, and everyone owned that stock and thought it was a great dividend play until it wasn't. And you never know when that headline risk is going to sneak up. So we use broad-based ETFs that keep costs down. We make sure that we have exposure to all markets. And you'll notice the market value of the first two ETFs here are the large cap domestic, and we have a little bias towards value at this point. And again, I just mentioned that growth, has had a tremendous run. We have an election coming up. We have geopolitical risk in at least 3 hotspots around the world that we need to keep an eye on. So to us, it makes sense at this point to have that value bias. Any questions for me so far? Okay.
I think you can keep going, Matt. You're doing well.
Okay, thanks. And then as you'll go down this list here, you'll see that we make sure we have exposure to all the other major equity markets, mid cap, large cap, international, emerging markets, and small cap. And if you look at, you compare the tax cost and the market value, those ETFs have done well over the years. We rebalance when if we have outperformance in one area of the market over another, we'll we'll trim when we think it's appropriate, and move the proceeds either into a market that's not performing well on the equity side, or move it over to the fixed income side. And with that, good segue here to page 4, which is the list of fixed income investments for the town. And as I mentioned, if you look at the current yield on the far right, you'll see most of these issues were purchased over the last 2 years. There's a couple of exceptions. The Citigroup piece here, right towards the middle of the page, was purchased at a time when rates were much lower. But that's really the only exception. We've been able to, add some nice yield to the portfolio here, and you can see a mix of CDs and individual bonds. Page 5, again, some CDs, Sallie Mae, UBS, and we have some Vanguard funds in here as well. They provide liquidity if we get a big distribution. Just recently, I think we had one that was north of $500,000. So I don't have to sell an individual CD or bond in order to get that liquidity. I can just bring it, get it out of the Vanguard bond funds in order to do that. And you sell a bond fund one day, you get the proceeds the next. So that works out very well, and it also provides a little bit of diversification. You'll notice the International Bond Fund is in there. And to add a little bit of duration, we have the Intermediate Term Bond Fund, which is, I think, close to 6% on that duration number, 6 years on that duration number. So overall, we're very pleased with how the portfolio has performed. We'll keep doing what we're doing in terms of staying invested, not trying to time the market, rebalancing when we need to, providing alpha by having, where we think, we need to have a bias. And as I mentioned, that's value right now. And we'll keep doing what we're doing as a fiduciary. I think we've done well. So I'm happy to take your questions.
What are the tax implications? Is this fund taxed in any way?
No tax consequences.
We're exempt.
We're exempt because we're a municipality.
Yay.
But we
And
can tax, which is pretty interesting, right?
Yeah, it's a bit.
Right.
I wish all my portfolios were.
Give it up, but we can't take it.
I know, right?
So thank you for explaining that piece about Vanguard, and that's where your loyalty for their funds, it allows you that flexibility to move things in and out. Is that where that comes, or is it you like the performance also? Yeah,
so we like the fact that the fees are incredibly low at Vanguard. Vanguard has forced other fund companies to lower their fees. And the founder of Vanguard, Jack Bogle, who I'm sort of a disciple of, he passed away a few years ago, but that man probably did more for the individual investor in terms of saving money by investing than any one individual. And we're fully behind that of passing on those savings to our clients. So, the Vanguard funds, especially the ETFs and the index funds, their internal costs are less than 0.1%.
Our ESG allocation, where does that come in?
Well, having those broad-based, yeah, there are certainly some companies within the ETFs that have you know, an ESG focus, especially the large tech names. I what I tell clients who are ESG sensitive, I'm happy to add an ESG fund, but it will add beta to the portfolio or risk because those ESG funds are typically so tech heavy. So, you know, but we certainly do have, you know, some exposure to, you know, ESG companies through those broad-based ETFs.
And were you letting somebody else do all the picking for you instead of picking the one that did perform?
Yeah, that's right. Yeah, and you know, again, you know, we will add ESG because certainly, you know, we have a lot of clients. You know, our footprint is here up along the coast. We have a lot of land trusts that we manage. They're very sensitive to ESG, but I try to get them away from an all ESG portfolio because it does take out some of those sectors in the market that, you know, they will outperform from time to time, and it's just a little bit more of a concentrated portfolio than I like to see.
Right, because we made a change to our allocate. I think we're at 12 to 18%. We gave you some wiggle room. I think we made our allocations no more than 12 to 18% because we don't want any citizens to say, why are we invested in an ESG when we could be in big oil? You know, so we were very careful about that. Where, you know, we are not, like you mentioned, a land trust or an environmental group where we have to have a completely green portfolio.
Yeah. Yeah.
Do we have any exposure to tobacco, to big tobacco? That's another question that always comes up from citizens when you invest.
Yes. If we're using a broad-based ETFs, you know, there's probably a few in there, Phil. And that's, you know, that's an issue, you know, that when you have, you know, when you're indexing, you're going to have exposure to, you know, some of those sectors that, you know, maybe some citizens would rather not invest in.
Right. But
What can we do?
what can we do?
Yeah.
It's difficult. You can't really have it. You can't. He's explained. You can't be in a fund where you don't have control of the fund. And there are funds that no big oil, no tobacco. I know that per se for some of the things that you've mentioned. But I just know that those are things that citizens care about.
Yeah, if the committee, you know, would like me to add, you know, like the Vanguard ESG ETF, a small piece that would be part of the large cap domestic allocation, I can certainly do that if you get some pushback.
Could you repeat what you said? Because I didn't hear it all.
If you do get some pushback, Phil, in terms of, you know, ESG, I will add, you know, the Vanguard ETF, ESG ETF. We can add that. It's, you know, it's a large cap domestic focus, you know, so that would be part of that, the large cap allocation. I would just take a little piece out of the large cap broad based ETFs and add it to that ESG fund.
Because again, my clarification question: we currently do not have an ESG fund at all, correct?
No. You certainly are. You're exposed to companies that have an ESG focus through the broad-based ETFs, but we don't have a specific ESG fund.
Any opinion, Jamie?
Well, I'm new here, Phil. Obviously I'd be more comfortable um, not holding big oil and big tobacco, but I've only been on this committee for 20 minutes, so
Right. Well, I feel the same way in my own personal investing where I don't own big oil or tobacco. And that's just my own personal, for my own personal portfolio. But I know we have citizens that would prefer that we didn't. So I'm interested if we could have a little piece that is an ESG, so Vanguard does have an ESG fund that, of course, right?
Oh yeah, yep, yep, yeah. We use it. Like I said, some of the land trusts that are very sensitive.
And what kind of, roughly, without looking it up, what off the top of your head, do you have an idea what kind of returns people have seen on those?
I don't have it in front of me, Phil.
That's not fair. I understand.
Yeah, with the tech sort of bias in those funds, they're going to do well. They've probably done well with growth doing very well over the last 5 or 6 years. Again, with the exception of 22. So, but again, it's sort of it's limiting the universe of equities, stocks in the portfolio, and that's I do know that when you have a constrained fund against a more broad-based fund, typically over the long term, that constrained fund is going to underperform.
Well, when it comes to investing, and we have people like you, I don't micromanage what people like you do. That's just sort of my own personal piece. And because JB's been only on the committee now for 21 minutes, could you remind him what the fee structure is for the first for the town?
Yeah, I think it's 40 basis points, Phil.
Thank you. Well, I think
that's for the whole fund, Matt?
Correct. Yep.
Well, most Main Street's not getting that.
No, they're not. I think your fee is probably one of the lowest that we have, with the exception. I guess it's public knowledge, but we also manage the Maine Maritime Scholarship Endowment. We may be a little bit lower on that account, but don't hold it against us. It's 65 million.
Well, when you pony up that much to have that responsibility, they deserve to pass on the savings. Derlin, any questions? May?
No questions.
How many people are coming to the party tonight, Matt?
Oh, I think we're going to have about 30 or so. So not a.
Right, you can brag about the graduates. Want to tell us about the 2 kids, and then we'll let you go.
Yeah, sure. I'd love to. My son Brady's graduating from 8th grade. He's going on to Lincoln Academy here in Damascata. It's where I graduated from. It's a tremendous school. Was formed in 1820 to specifically get kids ready for Bowdoin. All those many years ago, but now we have it's become more of a boarding school, if you will. We've got about 40 or 50 international students every year. That certainly helps with the bottom line, because we did have an issue with a shrinking enrollment here in this area with the price of land. If you're on the water side of Route 1, young families can't find a piece of land. So that those international students have really helped in that way, and more importantly, they provide they provide the kids, local kids, the opportunity to meet kids from different cultures and all over the world. So I really love it. My daughter just graduated from Lincoln last week. She is she's wonderful in culinary arts. She won a state competition a few weeks ago, and is maybe be going on to an international, or I'm sorry, a competition in Atlanta in a few months from kids all over the country, and she's working for a restaurant here in town and learning a lot, and going on to SMCC, which is the only culinary program here in Maine. And then after she's through with that, whether she wants to go to CIA or Johnson and Wales, she can make that decision at that time. But we're very proud of both of them.
Yeah, you
That's
should
awesome.
be.
Well, thank you for sharing that. It means a lot.
Thanks, Matt.
And I really agree with, we've been very lucky here at the College of the Atlantic that we're, one of the early people, early institutions with the United World College, and the founders are based here and have had a summer home here in town. And I've hosted 5 United World College students, and it is culturally amazing for all families, and it's just, and participants and students. It's really important. So thank you so much for sharing that.
Congratulations.
Sure. Thank you.
Congratulations. Wonderful.
So on that note,
Okay.
we're going to let you go, Matt. Thank you so much, and we'll look forward to seeing you the week of the 14th. And May and you can work out a date. Friday's always is it a good day for you as a rule?
Yeah, Friday's fine.
Okay.
All right, so May will schedule that out, and we'll notify you. So we're going to let you go. Keep up the good work, and thank all the people that work underneath you for making this all happen.
Thanks a lot, folks. Have a great weekend.
Thank you, Matt. Have a good
Thanks.
party.
Thank you, Matt.
Thanks, Matt.
All right, here.
Okay.
So we've done well. So we have
Yes.
one.
I just,
He's left, right?
I'm trying to leave here.
we're
There
not
we
going to
go.
talk
We
about
want to know what you're eating. We're all going to talk about what you're eating.
what kind of party? What's the theme? Besides graduation.
Well, there's going to be food.
I know.
The daughter, yes.
Oh, yeah. Oh, she probably doesn't want to cook for her own party, though.
Yes, they probably have it catered from the restaurant she works at, and Dad will pick up the bill.
I would hope so. I realized that I didn't have on the agenda my little presentation about the our internal side of how this has affected our books, the interest. So I
would
can
like
do
that,
it in
yeah.
a couple minutes. Just do a little overview of how these investments have affected our side. Let's see here. Okay. So this first page right here is a summary of our cash and cash equivalents. So this is as of March 31st. So I do quarterly reconciliations for our investment funds, and so this is as of 3/31. So all of our cash bank accounts ended up at this $4 million. We have the ARPA bank account, which is at $153,470, and then our capital projects fund. That ended up down here at $3.5 million for a total of $7.9 million in cash and cash equivalents. And then these next 2 reports here are based on our portfolio at the first wealth management, the one that Matt was just going over. We have the operating fund, and then our reserves, and then the marina. These 3 right here make up our portfolio as of 3/31. So this is the asset side of, so the debit to the entry here, and then down here would be the credit, which is how the spread of the asset allocation. So all of these assets have claims, or all these equipment. Yeah, these are all assets. They have equipment. They have a claim on the assets that are listed above in this one.
So those are all these are all the CIPs, Jamie. These are all the CIPs that.
Okay.
Yes.
And that's where the marina money is. I never knew that. Okay.
Yeah, we have it split out in a separate fund, but yes, our marina CIP is included in this fund. It's just split out separately.
Because
And that
as you know, the
shows,
Marinas
right,
one as an enterprise fund.
an enterprise fund,
Right.
and we account for it differently. It's more as a business than as, you know, governmental accounting. It's a beast. So then, yeah, so here's the Marina CIP of reserve amount balance. So that's the First National Wealth Management. And then we also have at the Bar Harbor Wealth Management, we have a trust account or multiple trust accounts there. That includes our cemetery accounts and then our scholarship accounts. And so within the quarter, there's pretty low activity here, but these are restricted funds. And so each yield of interest that comes during this time period is used specifically either for the Stanley and Reynolds Scholarship for MDI students or for maintenance for the cemetery itself. And then down here is a picture of just how exactly we've performed in the sense that if I go scroll, it's a year-to-date budget report. So it just shows that we originally, for fiscal year 24, we're anticipating $400,000 worth of interest revenue. And here we are at 3/4 of the year, and we're already past it and $54,000 more.
Well done.
So this is a sort of explicit sign of how we're doing that lays it out there. So does anyone have any questions about that before we move on?
I have one question, and just to make, you know, again, I want to include you in, Jamie, so you can understand. We also have our money market for our cash sweeps. Would you go over that so you can understand that?
Yeah. So we have. Are you talking about the ones we have the first money market account?
Correct.
Because we have ICS sweeps and the Bar Harbor and Bank Trust as well. So those are those accounts that are set up so that they'll be taking advantage of interest on our operating accounts, so that they're not just hanging out in the checking account and getting a lower rate than that they would. So we have an automatic sweep based on what the bank will do it, and then we get interest.
Amazing.
It is amazing. We have for our ICS reserve account is 5.25%, which is
Unheard of.
fantastic.
It used to be like less than 1%.
Right.
Yes.
It was like so we took advantage of this when interest rates went up over 5%. We started, instead of having it sit in the checking account and make nothing, we were getting 5% on the money, and we're still able to transfer it back and forth with no fee.
Nope,
right?
no fees at all. And then we also have an account, a money market at First National Bank, not First National Wealth Management.
Right.
And that also has an interest rate of over 4%. And that's for, especially in a period when we're not getting income taxes in, because we're at the end of the year. And so we're sort of not getting the revenues in like we usually do throughout the year because we're at the end and almost at the start of the new commitment. So that's where there are funds that are available to be transferred from First National Bank money market account to our operating account at the Bar Harbor Bank and Trust. But that's for when I need to make a bond payment, specifically in July, and we're low on funds in the regular operating account, and that's getting a good interest rate as well.
Yeah, our investments, I think, are doing very well.
Very, very well. Did that answer your question?
You did perfect. Yes.
Of the 11 million, roughly, how much of that is pledged to some other entity, either to a CIP or, and how much of it is just money that we have? With no
Great question.
That's an excellent question. Yes, I understand this question. Let's see here. I can pull up. Sorry, give me a.
All right, take your time. Because you got to go in and out of Munis and not theirs.
I'd figure out. So from what I can tell, the CIP right now, or as of March 31st, we have that 7 million in there. And that's specifically for the CIP. So there would be, from what I can tell, another 3 million that would be for the operating account for undesignated if necessary. I will, I'll make sure that that is not wrong. I know that the reason why there's a difference between those two reports is there are payables that have to happen between inter-fund transfers between those reserve accounts and the operating fund. But the majority of the First National Wealth Management portfolio that Matt presented is specifically for the CIP and therefore restricted.
Got it.
Vast majority, I'd say if there's any that's not for the CIP, it's not very significant.
So we're making money so we can spend it.
Exactly.
That's better than the other way around. Hmm.
Absolutely. And it's tax free.
Yes.
And all for being smart. And to lose what, 40 basis points to an institution to manage it for us. I don't believe in micromanaging people like that.
It's worth every penny.
I like the idea of the ESG. We both like the idea of ESG funds, and it's something that I think we should continue to talk about and push with them. But we don't want to, again, we're not just the four of us in the room and in this. We have to also think about all the citizens. So I know in my own personal account, no big tobacco. No big oil and we even take it to another step where we also don't have any defense contractors in ours.
Yeah.
In my own personal investments.
Yeah. No, I hear you. Of course, in a lot of places, that's ESG is a bad word these days. So.
Well, we just don't want someone to stand up at town meeting and so if I'm not, I think we gave them a wiggle room of no more than 12 to 18%. Mm-hmm. I think is our allocation for ESGs, and is what he's saying that those are already encompassed in the funds that they already hold, but they are poisoned by some of the things that you and I personally don't like.
You're right. I mean, what I got from him is that there's not much that we can do about that.
Unless you went for a straight ESG fund.
Which he says is risky.
It's risky, but it's something we can consider.
Discuss. Yeah.
Something I think we should discuss at our next meeting and see some of the performance. We can ask him what was the performance in other, for some of those land trusts.
The land trusts, what was their performance with just those ESGs?
Correct. I think that'd be a great comeback question to him.
So what happens between the meetings? Nothing. I mean, obviously he keeps working, but
we accrue interest.
A lot of it. Basically, we able to keep the taxes down, and we are able to keep, pay for the $6 million addition for the building here, keep the school open, and all the things that the town does. And we're not in the red as a town like many towns are. We're lucky. Yep. We are very lucky. I think we're very lucky.
Yeah, we're very lucky.
Yep.
I think a lot of towns would like to have the problems that we have.
Yep.
Because things aren't so good everywhere. I bet the city of Portland does better than we think.
They also have more people.
They do. They do. So we do have another agenda item though that we need another citizen member. So sometime between now and the end of the summer, if you have any ideas of someone that would be good for the town and would be good on this, with some kind of integrity and some kind of investing background, I think that would be a really good person to think about. So I'm open to We'd like to get at least one or two members. I can mark Michael Bailey as excused. So basically, we want to fill Jason Irwin's slot, and then I think that puts us in a really good thing. So maybe you and I will have a walk or a visit someday during the summer. And if you have any of some of the people and we'll all come up with someone that we're all happy with. I just don't want to willy-nilly fill it in. I want to have someone that would be an asset. I'm looking for someone to be an asset to the community, not just to take up the space.
Right. Be happy to. And it's residents. It's you have to be a town resident.
You have to be a year-round resident, a voter, and year-round resident. There was one really interesting. There was a woman 2 years ago that spoke up at town meeting who really knew what she was talking about, and I did not see her this year at town meeting that knew it. And I'll keep an eye on her because she definitely had an investment background.
I remember her.
When we changed our ESG, she grilled Jake with a lot of questions, and she was very good and was very aware of like what Matt said about ESGs.
Oh, cool.
Again, you know, not everyone loves them, but if you were friends of Acadia, that's all they can do. As an example.
Yeah.
Yeah.
And when Jason was on the committee, he was very helpful in explaining that and how he could still make them perform. But you know, that was the investment policy of most environmental groups. They don't, you know, they're not interested in killing people and poison in the water for good reason.
Good sign.
All right, so our next meeting will be after the first of the year. I'm going to just quickly look at the calendar for that week before we close. And I really appreciate you taking some time to be able to zoom in. Let me pull my calendar out. We'll look at that. May, you get yours going too?
Yes, sir. I have he said that second week it was probably the third week of January.
Right, so
the 17th.
The 17th, it would be a really good, that Friday the 17th is what we're looking at. Just as the warrant starts, you know, that'd be
Oh
good.
boy.
No, it's fine.
Well, I happen to
But
be.
you know, I think we want to see him every 6 months.
Oh, for sure.
For sure. You know, that we
Yeah, at least.
and Mason contact him with what? At least quarterly?
Oh yeah.
Often, right?
Yeah.
Good.
I ask him questions all the time.
I like that. That's
He's very responsive in email, which is great.
It's good.
Jamie, did you say that the 17th would work for you?
As of now, May, I'm completely open.
That's a great sign.
6 months away. How can you go wrong?
Same time.
Yeah, this is a good time of day for bankers and things like that. He gets to go, you know, he has the meeting, he gets to go home.
That's true.
And he has a camp. One of the times he came up here, he's got I think he has a camp like a 2 hour, like Damasceno area, if I'm not mistaken. They have some.
He lives in Damasceno.
Right, but they have a lake camp somewhere in between, in the I think in the China Lakes or somewhere like that.
Goals. It's goals.
Well, anything else from anybody? We'll make sure that the minutes go to Wendy Littlefield and post. And I want to thank you for your time. And if we could catch up after the 10th of July, you and I, again, as far as you have any ideas for a good new member, and I'll put my thinking cap on too.
Totally. And thanks, May, for sending me that extra stuff. I just looked at it, but it helps bring me up to some speed on this.
Was it help that I was hoping I couldn't find anything that was like right in your face would show exactly what you're looking for. So
so you will now receive the quarterly. We get quarterly reports, so you will now receive the quarterly reports. Okay, and if you have questions, you should contact us so we all know, so we don't wait to the 17th. Okay.
Terrific.
Of January. So we will get one in September. Will be the next report. We'll
get one in July.
July
for quarter 2.
For quarter 2.
Yeah, that's coming up soon.
Thank you, Jamie.
Thanks, Jamie. Nice to see you.
Thank you, Jamie. Bye.
Thank you. Have a good weekend, everyone.
Have a good weekend. Happy Father's Day.
Thank you.
Guys. Okay, what is it? Stop recording.
Stop recording, then eating for all.